All right, so good morning, everybody. Good morning, everybody. My name is Ekunda Awake. So today we're going to be having our morning live session where we'll be looking at a couple of things. I will be analyzing the market, you know, looking at like different pairs and giving like proper and adequate breakdowns. Right. So today let's check what we have for the calendar. So for the calendar, for today we have let's take a look at it. Today is 16th. So we're going to be talking about risk management today. But also we're doing like our life analysis, and then we'll be having it will be a chat with banks. All right. So let's commence. So for us, as we can all see, we have gold. We have gold hitting an all-time high, as you can all see, which is what has exactly happened. Let's put this back to 4 hour time frame. And it keeps breaking eyes, like it's so tiring. But we know that those buys are actually supposed to happen, right? So if we look at this closely, we realize the fact that that's why I marked out this area. I marked out because I was expecting gold to break past 25.30. If you watch one of my live sessions on YouTube, I think I made mention of that if gold should break 25.30 area, we're going to see the further push to the upside. And that was why I marked out this area, 25.30. As you can see, it's on the screen there. XUSD crossing 25.30 area. That was the area that I marked out that if gold should actually break past that area, then we'll probably see a push up. We'll probably see a push up momentum to the upside. Do you guys understand? Like, okay, if gold breaks up past that area, we'll be seeing market pushing up price further above. Are you with me? So that was the major reason why I marked this zone. So which the buys had already happened. So the buys happened between Tuesday or no, between I think Thursday. I think it happened on Thursday. Yeah, so the buys happened on Thursday, and then that was the reason why we had all that reaction to the upside. 42 live participants. Welcome, guys. That was the reason why we had all that push up momentum. So I marked that area that okay, if we break past 25.30, which is like a key level where market has been reacting for, like okay, if we have a break below that zone, then definitely, if we have a break above that zone, rather, then definitely we should see the buys, which is currently what we have. And then the buys, we have buys of about say looking like 300 and not 300, 580 pips from that area. So if you had even held this trade, this is 580 pips, but obviously you might not be able to hold it for long because you don't know where it's headed. Do you understand? So now for the new week, for me, sort of let's put this to a D1 time frame first of all. So if we put it on D1, it's quite strong, like it's bullish. But let's see what we have on D1. So for us to sort of look at the continuation buys for those that are here, for me, we have to mark out this area again as actually another strong area, first of all. And after looking at this area as another strong area, we have to come out to 45. After looking at the 4 hour, right? So on the 4 hour, we can see that this is the only area where you'll be. I'm going to explain this to you, so pay attention. On 4 hour, you literally be saying that this is the only zone where you're expecting gold to push down price to and sort of give us like a proper reaction, because that is obviously a very strong supply and demand area. Are you guys with me? So that's a very strong supply and demand area. This used to be a demand area that automatically now became a support, right? So having this area become a support zone, right? Having this area become a support zone, then we'll literally that okay, we are looking at markets. If we are going to be expecting reactions, we are looking at market pushing down price into this area that is here, and then after pushing up price and buying. If we are to wait and say, okay, we want to take like a proper continuation trade, because as it is, it's like I say, USD might even buy till the end of the year. But what we've seen so far, because if we are to even put the please mute, Wolverine, mute yourself. and then the flames or whatever, kindly mute yourself also. I'll just remove this person. So yeah, as I was saying, so the next thing is, let's put this to a 2-hour time frame first of all. So once you put this to a 2-hour time frame, this guy is disturbing me. I'm leaving him now. So once we put this on a 2-hour time frame, you literally would see that, okay, this is an area where you're expecting market to react from because of all of these zones that have been struggling there, right? But that's like saying we have to wait for at least 500 pips for market to push down back price into this area and then give us good buys. So for me, what I would do, since I know that we're kind of looking at an overall reaction of the bullish, but bear in mind, the market might begin to give reversals, like it might break some areas. And then, so what I know that since we know that if we're expecting buys, if we're expecting a proper buy, come on, listen to this one. If we're expecting a proper buy, that means we have to know we are looking at selling into 25. If we're looking at a proper buy, we're looking at gold selling into 25-30 area, then giving us the buys, right? What we can simply do is begin to look for possible sales, right? So I'm not going to force those sales. You begin to look for possible sales.
Listen.
I've moved out that person. So you begin to look for possible sales all the way down here, because this is the area you're expecting market to basically push up price and react from. So what I would do is, it's still bullish, right? The buys are actually still strong. What I would then do is I'll come down to a lower time frame, like 1 hour. And I begin to look for possible POI trades. Now pay attention to this part. Now, let's get a live trade quickly. So now this is it. Now, look at this, guys. Market created a low here, right? And then this low pushed up price sort of to actually break structure here, right? So tentatively, this is supposed to be an area where the buys are supposed to continue from, which means this was a high, this was a new high, break of structure, market creating this low. Automatically, market is supposed to come down back into this area and then buy. So you're supposed to have your stop loss sitting down around here based off of market structure, right? But now, pay attention to this part. If we have a break below the stop loss that's supposed to be here, we can sort of see the sales continue all the way down, at least giving you 100 pips. Do you understand what I'm saying? So if I were you, I sort of would mark out this low, right? I mark out this area like this. So if you get a break below that zone, a proper break below that zone, right? Say you have a break like this, and let it break properly. Once it breaks, hold on. Let it push your price back into that area, that low that it just broke. Because automatically it has induced the other block for buys here, which can sort of change the likelihood from this buys that is here to sales. But you won't just immediately enter. Once it breaks that area, wait for it to reject back into that zone. Once it rejects back into this area, then you can now take your sales all the way down. At least then that's how you've been navigating it. So then that's just like, I just have to show you this first POI. Like beginner, you have to go and learn from the beginning. This is advanced classes. So for something like this, you can have a proper sell around here for XUSD. You can sort of find a way to sell. These areas, giving like a 50 pip stop there about. Right? Giving like that's how you pay attention to those areas. Then you have like at least market giving you 50 pips SL to get about 100 pips, 183, 88 pips. Did you guys understand what I'm saying now? So that's like the breakdown for XAUSD. So that way you are no longer shocked, or you are sort of don't understand what to do as regards like the zones where market is going to break. So you have to calm down and make sure that there is a proper break below that area that is there. So once you see a proper break below that area that is there, then you can now say that, okay, I've seen a proper break below this zone, which is also actually on 1 hour. So what we will now do is we will now take this zone to a 4-hour time frame and see what it could be giving us on 4 hours. Right on the 4 hour. Then on the 4 hour, you can see that this is actually a strong retest zone of 4 hour. So if we have a break below this retest zone on the 4 hour, it sort of validates that we can have the continuation of the sales. All right. So if you put this on the 2-hour time frame too, likewise. So can you see what I'm saying? So normally that it did not break this low. That's why it's pushing up price. So if we have a scenario where it breaks past this low, let it break down, then wait for you to pull back price into that low that there, and then you cannot begin to have like market tanking and pushing that price all the way down. Do you understand me? So that's it for XAUSD. So now let's pay attention into another. I'm going to like mark out that region for you guys right now. But let me put this back on the 2-hour time for my screenshot and screenshot it or something. Hold on. Let's screenshot this. So just make sure that you basically apply risk management. All right. So that way you basically make sure you're safe. Because there is no way you can get those solid buys now, except it breaks maybe this high. So if it breaks this high, the question is, where are you even going to set your new take profit? Right? So it's like living on the edge, but we can sort of see ways to get the sales because it's going to pull back. It's going to pull back to an area where to now continue the buys from. All right, and that's just it for gold. So that's the breakdown for XAUSD. And now let's see if we can check on GU and have a little conversation so that every other person gets to move on with their day. You're welcome, guys. You're welcome. So let's do the next one. Beautiful. We have 47 live participants here, about almost 50. I took out some people. So almost 50 people on the live call. Yeah, you're welcome, Williams. You're welcome, guys. You're welcome. It's what we do, you know. So you're going to be backing up the trade with a big lot size. Well done. All right, let's go, guys. So now let's look at XAU. Let's XAUSD. I think I also cover some of that here. Let's look at GU. So let's keep it simple because we have a whole lot of Chima, you're welcome. It's fine. Good morning. So you guys should make sure that you apply risk management. They're thinking of using 2.50 lot size. Okay, the stop loss is like 50 pips, so you can take the risk. It's fine. All right, so what do we have on GBUSD? Let's see. I think I have an analysis there already, so I don't want to go against what I analyzed. I don't think it has gotten to the POI yet. But let's look at what we have for GU. Okay. So GU is slowly getting to 50 pips is not much. That's like only if you want the trade to take you out, right? 50 pips SL on gold is actually standard. I've seen people that use 150 pips SL, which is actually very, very crazy. But 50 pips SL is and that's because we've in our signal channel, for instance, now in our forex signal room, we've sort of reduced the stop losses. We've modified it a bit to 50 pips, 60 pips ish. So that way your TP1 sometimes can be the same 1:1. You can then set your stop loss at break even, target 1:2. But most times when you target shorter take profit, that's the truth. Forget anything on the internet. This is the truth. When you target shorter take profits, you tend to get there faster. Most people that are actually rich, see, there's a saying that in order for you to get rich, you take lots of risks with small amount of money. But for you to stay rich, you take small amount of risks but with big money, which means you target short pips but with big money. The big money is now converted to big lot size. Do you understand what I'm saying? So you cannot stay rich if you are basically targeting big pips. You're targeting 350 pips, and then you're not using one standard lot. But for most people, they use big lot sizes, target short pips, in and out, they're out of the market. And we have a lot of people like that we know that are successful in Nigeria, that is what they do. Forget schemes. That's the sincere truth. They target small take profits. I've got good 1:2 ratio. Well, sometimes people even do 1:1. 1:1 ratio, 1:2. The best 1:3 ratio. All those 1:10, you are just wasting your time. Because out of 10 cases, sometimes you might just play out 2, 3, 4 times. And you get frustrated. You might even be having good wins, right? But the fact that you are having 7 losses will basically sometimes begin to affect you. Even despite the fact that you are having wins, that the wins are higher than your losses. But the fact that your losses is actually beginning to get more than the stop losses the losses is getting higher than the wins, but the wins is higher. For instance, now, don't worry, it's not crazy. If your 3 trades is 100 pips, take profit, and then your 7 trades is maybe 20, 15 pips stop loss, your wins, your losses did not still match up with your 3 wins, but it will begin to drain you to see that you are having so much losses at the end of the day. Do you guys understand what I'm saying? So that's if you check. So for GBP USD right now, you'd see that we have this inducement area that is here. So for me, I'm expecting market to push up price into this zone and basically sell. So what we are looking at sort of is a scaling in entry. What do I mean by scaling in entry? A scaling in entry is actually an entry where market has reacted before. Market has given a possible trade before, and you are looking at that same area as an area where market can go back to and react again. Are you with me now? So you're looking at that area as an area where market can go back to and react again. So that's what I'm saying. So for me, that would be saying that, okay, this is supposed to be a lower high area that created all of this lower low. So if market should push up price back into the same region again, it's supposed to give us a further reaction to the downside. Because, first of all, we had a high here that created this lower high, sort of creating this lower low. Market push up price to invalidate this zone, activated this zone that is higher. Then market push down price again to create a structure, a new structure. So automatically, if we convert this back to line chart, you would see that we've had double break of structure. We have break of structure 1, break of structure 2. That's why the fact that we've had internal break of structures here. So sort of we are convinced, and we've analyzed that we are sort of expecting GBP USD to sell if it pushes up price back into this area that is here. So that's the reason why I analyze that chart. Do you guys understand that now? So I have recorded that part. So for me, we're sort of looking at market reacting there. So let me give a further breakdown. Provided market did not break past this high, we had a lower high region here that did not get to this high. We had this other region here that never got to this high. Then we have market slowly pushing up price into that area right now, and then we could see a proper reaction because market reacted from there before. And this analysis was done on the 4-hour. So because it's on a higher time frame, showing a continuation pattern, showing a proper break of structure, and the market continue to push down price, then I'm convinced that, okay, we should be able to see the reaction at least further, right? And that's the reason for this analysis on GBP USD. And that's it for G, you guys. So today we'll be talking about risk management. So one of the things I used to talk about and I lay emphasis to is that a lot of people tend to focus. The reason why a lot of people have back-to-back losses, which happens to some of us sometimes, is because most of us always tend to focus on risk based on capital. For instance, now, some people say, oh, I don't want to risk more than $10 on this trade. No, that shouldn't be the conversation. The conversation should be capital risk and lot size risk. What do I mean by that? On a normal day, if you are trading a $1,000 account, what you're supposed to be trading or taking on that $1,000 account, what you're supposed to be using on that $1,000 account, what you're supposed to be risking on that $1,000 account is 0.1 based off of standard risk management, right? Based off of standard risk management, what you're supposed to be taking as risk is 0.1 on an account. Do you understand? So 0.1 is supposed to be the lot size you have to take on an account based off of standard risk management on a 1K account. But think about it. Is 0.1 or 0.01 is not what will change the dynamics of your life. Right? So you begin to ask yourself, okay, on this $1,000, I want to take a trade. How much am I comfortable risking on this trade? Okay, what I can afford to risk is $100. What is the stop loss of this trade? The stop loss of this trade is 25 pips. Right? Now, you are going to exhaust that $100 on the 25 pips SL, which means on the 20. So now, instead of you using the 0.1, which is standard risk management for $1,000 account, because what you want to risk is $100 with a 25 pips stop loss, what you are going to be moving to is no longer a 0.1, but 0.25. So 0.25 is what you need to basically exhaust $100 risking 25 pips. So even if you hit SL, what you are going to be risking is a 0.25 lot size. And that is what will basically be your $100 risk 25 pips stop loss. Are you guys with me? So let's even imagine that your take profit is 100 pips. If your take profit is 100 pips, you give yourself the opportunity. I'm going to repeat it, don't worry. The class is recorded, so you can go back to watch it. You give yourself the opportunity to be making $250 profit, which is 25% of your $1,000 account, instead of making $100, which is just 10% because you are risking 0.1. Are you guys understanding what I'm saying? Are you getting the scenario? So you've moved from risk management of the 0.1 to you are risking based on your risk appetite, lot size, and capital ratio. And that's what I do. Part of it, though, the rest is for those that run mentorship. Do you understand what I'm saying? So that is it. So you're going to be risking on your. If you ask yourself, okay, I want to risk $100 on this trade, what's the stop loss? Stop loss is 25 pips, right? For 25 pips stop loss for a $100 risk, what you are going to be using is a 0.25 lot size. So if your take profit, for instance, is 100 pips, you are going to be making $250 instead of making $100 if you were using the 0.1 based on standard risk management for a 1K account. Right? So that is the breakdown for the risk management based on your account size and your risk appetite and lot size ratio. Do you understand? And then we're looking at gold at those areas that we marked, and then GBP USD, where we're expecting market to sort of react from an area that from this area that we marked above here, and then basically sell. All right, and that's the breakdown for all of the peers, alongside the overview on how to apply your risk management. So that way you are not limiting yourself to 0.10, whereas you should have been ahead, taking risks based off of your risk appetite, 1, 2, the stop loss that was given to you, and then 3, your capital ratio. And then that's it.